One thing that we noticed is really over the last 2 weeks that, for example, the implied volatility for calls is actually higher than for puts. So that means over the last couple of weeks, we saw actually stronger demand from people, from traders, to buy puts than to buy calls. And I think this has really shifted over the last 2 weeks. And suddenly, really, there is more demand for calls, which tells us the derivatives markets, or the traders that are focusing on the derivatives market, are really trying to position themselves for higher prices, versus the last couple of weeks is more protecting their positions for more downside pressure, really.
Happy Monday, everyone. It is September 23rd, and you are watching and listening to Markets Daily, hosted by me, Jen Sanasi. If you are a longtime listener of this show, you know that we navigate the currents shaping the crypto markets here, providing insights against the broader financial landscape. So whether you're actively trading or simply fascinated by the volatility and the craziness that is the crypto markets, we're here to be your compass to understanding what's happened, where we are, and where we're going. Good morning, everyone. I hope you had a fantastic weekend. Joining today's show is founder of 10X Research, Markus Thielen. Markus, welcome back to the show. I've been very excited to have you on, given everything that's been happening in the markets recently.
Yeah, thanks for having me. Glad to be back.
Of course. Now, I say this on the show every time we talk about one of your reports, that almost every time you come on the show, your predictions, which are based on your technical analysis, are often correct. Now, like I said, you've been a guest of the show a few times, but I just want to level set for our new listeners and get a quick background on you so we can understand where your analysis comes from. So tell us a little bit about you and how you've developed the different analyses and what indicators you look at.
Yeah, again, thanks for having me. We have run hedge fund money for really, the majority of our careers here, really. We have been really traders. We look at the market really from a money, management perspective, and not just from like a research perspective. And I think that really differentiates ourselves. And we look from anything from really on-chain analysis, which is a little bit more fundamental, a little bit more longer-term viewpoint, but also to really short-term technicals if there's a reversal indicator. And of course, we also focus on macro quant analysis, where we look at cycles. Have the cycle been diminishing, projecting diminishing returns, or if a normal cycle is still present? And I think that's kind of helped us to dig out some kind of interesting analysis. And that's, I think, we have luckily shined a lot through the CoinDesk interviews, because they were timely. So it's really recorded. It's not that we made something up in history. So it's really where, we predicted really the bottom of the market. We predicted sort of the top of the market and sort of the range. And I think we are not afraid to go against consensus as long as we can back it up with data. So we really, data focused. We're running data every day, and it helps us to really stay attuned, because it ties it in with everything that we do, plus the market structure analysis. Do we see a minting in stable coins? Do we see an expansion in, for example, in implied volatility, or a futures premium widening? All these factors we run daily. We look at them, and we try to form our views and, identify where the market might be going next.
Well, it's fantastic to hear that your analyses are based on data, because not everyone who speaks in the media has their analyses based on data. Sometimes it's some other factors that are not always maybe as accurate. Given what you've just told me, what are you watching this morning?
Well, there's, of course, tons of factors we are watching, every day. But of course, one thing that we noticed is really over the last 2 weeks that, for example, the implied volatility for calls is actually higher than for puts. So that means over the last couple of weeks, we saw actually stronger demand from people, from traders, to buy puts than to buy calls. And I think this has really shifted over the last 2 weeks. And suddenly, really, there is more demand for calls, which tells us the derivatives markets, or the traders that are focusing on the derivatives market, are really trying to position themselves for higher prices, versus, the last couple of weeks is more protecting their positions for more downside pressure, really. And of course, we also seeing, and I think that's quite interesting, is really that suddenly a pickup in trading volumes in Korea. And there's, of course, a few factors. The central bank in Korea, the Bank of Korea, will have a supermarket, a trial project in December, where 100,000 people can actually pay with the central bank's digital currency in supermarkets. So a lot of momentum is actually picking up in that region. But we also, we're seeing, again, increase in trading volumes. Suddenly trading volumes increased from less than $1 billion a day to 2 to 3 billion for the last 4 consecutive days. And I think that kind of shifts a little bit the momentum away from just, for example, Bitcoin trading to more altcoin trading. And I think we're seeing, a lot of those factors occurring. And I think the other interesting aspect was really like 2 weeks ago, we noticed really that some of the technical reversal indicators had retraced to levels, let's say the RSI at like, 30%. That's usually the indicator when the market is really oversold, or the stochastics indicator going back to 10%, where the market was just very oversold. And historically, we have seen these rebounds in the market. And it seems really that this rebound might be actually in the beginning of something bigger that we're going to see in Q4.
I want to touch on something that came out of 10x research a few weeks back now. It said that if the Fed cut rates by 50 basis points, it could spell economic turmoil. It could signal economic uncertainty ahead. That was something that went a little bit against the grain, as 10x research does. We recently had Maelstrom CIO Arthur Hayes on the show, and he showed a similar sentiment now that the rate cut is behind us. Do you still stand by that? Because it sounds like what you're saying now is that we can expect the markets to take a turn for the better, but we saw that 50 BPS rate cut. So just make sense of that for me.
Yeah, so there are a few considerations here. So number one, and this is kind of like a projection we have been running around with over almost like a year now, really, since the Fed went on pause last year in July after the rate hiking cycle. And usually when the Fed pauses after a rate hiking cycle, this is usually the strongest period for Bitcoin. This is really when sort of like the pressure from higher interest rates has stopped really. And then Bitcoin actually has a super strong rally. But once the first rate cut comes, then the odds are sort of like 50-50 if we go higher or not. So the last time this happened was, of course, in 2019. We also came from a lot of interest rate hikes. Suddenly the Fed cut interest rates and Bitcoin rallied by 10% over the next kind of couple of days, but gave it all back very quickly. And because there were subsequent rate cuts, the market actually fell over 30 or 40% really. And I think the interesting aspect here is if the rate cuts come based on inflation, that's really bullish. But if the rate cuts come because of lower inflation plus lower growth, so more downside to the economy, then actually it signals more risk in the market. And that's what we were warning and that what we were worried about. But of course, I think Powell articulated this really well, that he tried to really assure the market that this rate cut is because of the Fed's or the FOMC's confidence that inflation will drop back to 2%, and not necessarily because there's weakness really in the economy. Yes, there is some weakness in the labor market, and they're projected higher unemployment rates even into year end. But I think the key point here is really that the Fed is trying to steer the market into the assumption that this is all preventing any further economic weakness. And when you look very carefully, each of the last 3 months, during the first week, Bitcoin fell 10% in each of those last 3 months. And this is usually when we get the ISM economic data coming out, that's when we get the US labor market data coming out. But what of course, I think the key factor that has changed is that initial jobless claims, they peaked in early August, but they have consecutively come in lower, significantly actually lower. I think the lowest level now since May this year. So almost like this sort of like this employment risk scare that we had has been really kind of like, I guess through this Powell put now kind of pushed aside. And it doesn't seem like that there is this fear that we had a few months ago from the labor market projecting, how the Fed is going to act. And I think the Fed seems to be quite calm here. That's why we don't think actually there is a lot of tail risk happening from the employment market right now.
Okay, I want to come back to the increased likelihood of a breakout. So you're looking at the window of October to March. You say there are multiple buy alerts for Bitcoin, Ether, and other cryptos. Let's dig a little bit deeper into that. And let's start here. Aside from Bitcoin and Ether, what other cryptos are there buy alerts for?
Well, it's interesting. We just, of course, had this, the big token 2049 event in Singapore, but also, the weekend following the event, we had, of course, a Solana, breakpoint. And I think everybody knows quite well last year when we had the Solana breakpoint in Portugal, that suddenly, Solana, massively rallied. It really helped the crypto market. And it really was the beginning of the whole meme coin, I guess, frenzy really. And I think a lot of people sort of like probably speculating that we might see this as well. But I think for us, the key was really that, for example, we have been quite negative on Ethereum, for the last couple of months. And I think we can really, or we could justify this really because of lower revenues. Nobody was really doing much in DeFi really. But when we look at, for example, the weekly RSI level, which has now actually dropped to levels where usually we see like a major bottom, we actually became a little bit more technically constructive on the market. I mean, we would still focus really on Bitcoin because we have so many events coming up. It's probably the beta adjusted, the strongest, currency. We have a little bit on the sidelines, for other kind of like, smaller altcoins. But I think to really deploy larger amount of money, I think going with Bitcoin is the right approach, or having even Ethereum right now as a higher beta play for the next couple of weeks might also make sense.
I think this leads it. So when we think about Bitcoin, we think about hodling, right? And I know in your most recent report, you talk about hodling versus tactical market timing, and hodling actually might be outdated for assets like Bitcoin and Ether. Tell me a little bit more about that.
Well, of course, if you would have invested 10 years ago, it would be very different than now.
Right.
I think, expecting, a 10x, return from Bitcoin might be a little bit challenging. Even, there's other people, projecting, 100x or 1000x, even though the next 3 years that Bitcoin is going to go to 1 million or 10 million or 100 million or wherever. But I think realistically, from a trading perspective, it might be more difficult to really achieve those returns. And when we look at, the window between, for example, October until March, Bitcoin has been up over the last 10 years on average, 40% during this period, versus it has gone up only 26% between, the April to September period. And, $1 invested, in 2013 during the kind of October to March window has massively outperformed, during really the summer period. And everybody kind of knows the history of this year. Bitcoin has struggled since sort of like April this year, similar last year. So there is this big seasonal factor, and we think we're going to kick into this bullish seasonal factor now, because with all these catalysts that are really kind of lining up. On the one side, of course, we have on October 7th, the FTX, creditor judge is going to decide if the payouts can happen, and if they happen, they're going to happen within the next 2 months probably. So they're going to happen probably even before December. And that's going to be around $16 billion in US dollars being handed out to users worldwide. 12 billion of those are with FTX.com creditors. And probably, 50% we assume are going to be probably deployed back into the crypto market, or maybe like 8 billion US dollars out of the 16 might be being put into the crypto market. The market probably is going to front run this a little bit, as it always does. And I think there are some other interesting aspects, coming up. We don't think the election really matters too much. I think you can argue on both sides how Bitcoin might benefit if the Democrats or the Republicans might be really in the White House. So, we don't think that's a big catalyst, but I think other catalysts, again, the FTX is going to be a big catalyst. We're having also more on the IBIT, the BlackRock ETF options market coming. There is more, of course, on the custody holdings, what banks can do. And there's another accounting rule going to kick in by December. So I think there's a lot of stuff happening, and I think that's going to carry us into really a strong Q4. And that's why we're expecting actually that Bitcoin is really going to break out in Q4. And I think that's going to surprise a lot of people, because I think most have really given up that we're going to really make new all-time highs anytime soon.
Hey everyone, did you know 52 million Americans own cryptocurrencies? That's not just a number, it's a movement, economic, social, and political. Decentralized finance, blockchain, and digital currencies are more than buzzwords, they are the future. This November, it's on us to show up and step up We need to protect crypto to ensure it continues to fuel innovation and freedom for our families and businesses. Don't let this opportunity slip by. The future of crypto is on the line. Make your voice heard this November and pledge to vote now at standwithcrypto.org/pledge. Markus, you just said that you don't really care about the elections, and 90% of the guests who come on this show say the opposite, right? They say the elections are going to be this big catalyst for crypto. Why do you think that it's actually not going to be a big deal?
Well, Bitcoin, doesn't know U.S. politicians, right? And vice versa. I think that's what we have heard. I don't think really it really matters too much. I think you can make an argument, either way. I think, even if the Democrats are going to be in the White House, they're probably going to lose the Senate. So not much can be actually pushed through in the policies in terms of maybe tax hikes or anything like this. Indebtedness is going to go up. Spending is going to go up. That's probably where Bitcoin is going to benefit, no matter who is in the White House, really. So I don't think really it matters too much. I think it's really, much bigger than politics. I don't think, Bitcoin was invented to circumvent any, favored party of the U.S., executive branch, really. I think it is really, a global kind of monetary currency. I think what we're going to see is really around middle of November when we get the second or the third batch of the 13F filings. We're going to see more pension funds having bought this. We also have, of course, heard that, Bhutan has bought 13,000 Bitcoins and they're mining them themselves. So they're not really spending it. We know that several mining companies are operating there, mining the Bitcoin very cheaply. And I think, come middle of November, we're going to hear again, more pension funds in the US have bought Bitcoin. And I think that's going to be, a big driver. And again, I think you can make an argument either way how, Bitcoin has thrived, under Democrats, under Republicans. It didn't really matter. And I don't think it's going to matter going forward. And, and I think that the polls are probably very unreliable right now anyway. So it's difficult to make or to form a judgment. And again, it's a global currency and it depends on other things than just who's in the White House.
Let's go back to that October to March window. What levels are you watching?
The key level for us is really the previous bull market high, which is 68,330. We warned really our subscribers to really, get out of the market if Bitcoin falls below this level. And, we looked pretty good when Bitcoin dropped, to 50,000. And as you know, the last time, we spoke with you in April, we were, pushing for this drop to 52,000. And, it finally occurred. So we think really, the levels we're watching right now, it's on the upside is 65,000, which we're very close, and then 68,000, which I think we're going to accelerate above this level. And I think we should reach this level in October and then really push through it. But I think on the downside, because we are traders, so we need to watch also our downside because everybody knows that Bitcoin has these 70 to 80% drawdowns per cycle. And yes, while, hodling has been a good strategy over the last 10 years. But I mean, having an 80% drawdown is maybe not, everybody's favorite trade. But when you look at the 21-week moving average, which is, a little bit below, let's say 61,000, that has usually indicated if Bitcoin is in a bull or bear market. So the 21-week moving average is really key to watch in protecting profits, really. And if you're below, I think then it's, worthwhile to take some chips off the table. I think we can make an argument from on-chain data that actually not too much is happening yet, but I think on-chain data can be lagging as it did last year in September. It also took until October until on-chain data actually turned more favorable. It's more really the technicals that turned more favorable and showed this move, this push higher. And what we're seeing now is really that new minting in stable coins that's helping. We're also seeing more increase in futures leverage. And again, the options market is actually geared to higher prices now, and this is a clear change where we were 2 weeks ago.
So you told me the numbers on the high side, but on the downside, what level should we be looking at?
Well, again, it's a 21-week moving average with around 61,000. Below, I think it opens the window quite deeply until probably 50,000 if not lower. I mean, that of course a wishful price target is sort of like, the mid 40s. I don't think we're going to go there this year. But that would have been like a really strong super support level. This is kind of like closely, associated with sort of like the ETF launch. I think it was what's interesting, and this I think shows really how technical the market really is, or how traders really base their decisions on. When we had the August 5th crash, where Bitcoin really dropped from 60,000 to 49,100, this was almost the same level as the high one day after the Bitcoin ETFs were launched. So the market is very technical, and the market really looked at the technical levels. But I do think that we have, averted the downside, and we're going to go try and break now out to the top side, because yes, people talking about, of course, the cycle, but not many people seem to be positioned for it. And I think that's what the option market is indicating.
All right, and Markus, I think I asked you this last time, but a lot has changed from April to now. What trend indicator should folks be watching as we head into October?
Trend indicator is really the 21-week moving average. If Bitcoin is above it, it's a bull market. Below, it's a bear market. And I think this has really shown through various cycles. And I think just following this one indicator is probably good enough to make good decisions and, to make money in Bitcoin.
Markus, thank you so much for joining Markets Daily this morning.
Thanks for having me.
Awesome. And thank you to everyone who watched and listened to this show. If you like listening to Markets Daily, subscribe to the CoinDesk Podcast Network. That's available on all podcast platforms. And if you like watching, subscribe to our YouTube channel, give us a thumbs up, leave us feedback. We read all of the comments to our own demise. But if you leave some feedback in there, we will be sure to address it. Thanks so much for watching, and we'll see you tomorrow.